What's up, YouTube? It's Joe Catchpollia sitting on the couch, making some money, investing in fractional real estate online, as usual. Today, I wanted to talk a little bit about one of the problems I see on Lofty. Compare some of the stuff that's going on there. As far as the deals that we see on there to some of the deals on Mogul. If you've been watching my channel for a while, you've probably heard me talk really talk positively about the deals that Moguls brings to their platform and having a much different impression of the Lofty deals. I do still spend a lot of time on Lofty. I'm making a very good return, but it's almost always on these discounted deals, where somebody else has already lost money. Most of the time, they've lost a significant amount of money. And so I think it's not a great platform for someone who's not employing that strategy at the moment. And the reason why is they're not attracting what I think a typical real estate investor would consider a good deal. And so I wanted to talk a little bit about what I mean by that, do some comparisons. And then also, I think there's a solution for it, right? I mean, and up until now, I've just been talking about, well, I think Lofty really needs to figure this out. I think there's an opportunity for some of the co-owners on Lofty, not the co-owners of the company, but the co-owners of some of the properties, and maybe just a couple other real estate entrepreneurs to really make some good money using Lofty as sort of a capital raising platform or as a deal as a way to. I'll get into that in a little bit more detail, but I want to first really flesh out what I think the problem is, right? And so if you look at anything that's come to the platform, um, so if you're going to have deals that people actually make money on, it's got to be these greater than $50 deals, right? If it's below $50, somebody's already lost money. So all of the deals that you see me talk about that I've been buying and making money on, 90+% of those have been, I buy the token at $15 or $20 or, maybe 30, right? But very, very rarely 50 or over. I do own a couple that are over that price. Some of them for different reasons, but there's very few deals that come to this platform that look like what a mogul deal does. And so let me tell you a little bit about. Um, this reminds me, please like and subscribe. Tickle the like button. If you haven't already, in the link in the description to this video, there's a link to a generic fractional real estate Discord where we talk about a bunch of different platforms on a daily basis. There was a good discussion on there about moguls deals today, which is what made me think about that. Um, but also, I have links to all the places where I'm currently invested on. Some of those referral links don't work the way they might maybe say because some of them have changed over time. Ground floors, I'm not exactly sure what they're doing for you. Uh, Lofties, I think, is broken, but just like always, do your own due diligence on any of the platforms that you decide to invest on in any of the properties, right? Just because I say I like their deals, one, it doesn't mean that every single deal that they do is great. It also doesn't mean that you're going to make money, right? Just because I like them, I could be missing something just like anybody else. And so you want to do your own due diligence, make sure it's a deal that fits your current situation. But what do I mean when I say that I like their deals, right? Like what makes, for example, this is one that came out yesterday. It's one that I invested in already. What makes it? I did a video. If you look in the Mogul playlist, you'll see that video. But what makes this a good deal versus one that's not? And the biggest thing for me, well, one, it's a market that I like, right? It's a suburb of Atlanta. I always talk about, okay, these markets are, I'd rather be in a growing market and that sort of thing. But beyond that, just from a pure numbers perspective, the easiest way to look at these is the unlevered yield on cost or a cap rate. And so for their deals, they're really, I don't know that they actually say their cap rate anywhere. What they're really showing us is like what I would call an unlevered yield on cash. They're calling it an unlevered cash on cash yield. Um, I'd call it an unlevered yield on cost. They call it an unlevered cash on cash yield. There's, some of these, it depends on when you enter the business. And there was a time, where cash on cash returns, we'd call that your equity dividend rate, right? Or maybe just more the nerdier people did. But anyway, you can see, this is 9%, right? And this is a somewhat comparable number to a cap rate, but they're actually nerfing it quite a bit by because they're actually looking at your number relative to your total cash, right? Which let's see, which is including all of these, right? It's including your maintenance reserve, it's including a vacancy reserve, it's including all the costs to them, right? So it's their fee that they charge an upfront fee when they put the deal together, and then they charge an ongoing fee. All of that is baked into this, right? So they're not so if you were actually just looking at this property in the world by itself, it would have a higher cap rate than what this unlevered yield on cash looks like. Because, and I like that they do this, right? They have a very healthy reserves on their properties, and I think it's the right thing that they're doing. But I just want to make sure that's clear, right? Like I'm going to show you the cap rates that Lofty's, telling you in a minute, and I don't want you to look at these and think, oh, it's a real apples to apples comparison. This is actually they're aiming, this number should actually even be higher than it is, right? So they're giving you fantastic unlevered yields. And the reason that I'm going to focus on that is because a lot of the lofty deals depend entirely on financial engineering, changing the way, who's paying the mortgage and whatnot to create the really high yields that they're giving out. And which is great if all you care about is your yield next month, but it's terrible if you are looking for a durable yield, right? Like if you look on the platform, there's very few properties. There are some, but there are very few that have consistently paid out a high yield. And so I'm going to compare this to, and this is actually already taking into account their vacancy rate and whatnot. And so this is one that, I was excited about. I jumped into this one right away. But this is one that I didn't buy into, right? But let's look at what because it's not 100% about this number, but look, they have a 10, right? This one's a 10. It's a fantastic yield, um, unlevered, right? Like, I mean, this is that's why I get excited about their platform. I mean, they really are just finding deals, putting together deals that are not easy to do, right? And so I'm going to look at one more, and this is one that I invested in. This is actually, as far as ones that I've put money into, I think it's probably the lowest yielding one that they have. Um, and again, it's 7.5, right? 7.5 unlevered, again, somewhat comparable to the cap rate. Uh, but it's a little bit nerfed because they do have, they're including all the cash that they're putting into that deal, right? Not just the purchase price. Um, and so, this is the worst one, right? 7.5%. Okay, so let's look on Lofty, and so the most comparable number they're providing in this is this cap rate. And like I said, it's not exactly the same, but it's close enough that we can see that that they're miles apart on most of their deals, right? 4, 2, 3, 5.6. Okay, we're getting somewhere. This 7.41, I actually have that one open because I think that that's not even accurate. Because if you've gone through a bunch of these deals with me, um, we start to see that that it's oftentimes some of the numbers that are baked into so oftentimes Lofty's just giving you a they're annualizing last month, and I think that's what they're doing here. And so then that gives you a decent cap rate when they do that. Actually, though, this one looks like this is their monthly one. But then they're projected 30K. Let's look at that. I think that that's not right either, though, right? Let's see. Oh, that's actually the number I just had up. Yeah, so it's not giving you that number, right? Um, Let me do it one more time just so you see. So looking at their projected annual 30251.46 divided by, and we'll do this number here, 562,800. It's not this number, right? That's not what they're telling you. That would be a little bit closer to to what the mogul guys are doing. But so let's multiply now and fix that. 562,800. So now let's divide it by just the purchase price. It's still not even giving you the number that they're giving you. So one of the things that really bothers me about Lofty is it's really hard to figure out sometimes the way they're calculating things. It's one of the things that I've said about Mogul quite a few times, like the way they present their numbers, they're actually giving you all their projections. And one thing that is different though is Moguls are projections versus Lofty is typically they're giving you what's in place at the moment, but they're letting that fluctuate on a monthly basis, which I think is ridiculous. I've talked about that quite a bit. Like you should never be annualizing last month, especially not when you're dealing with a short-term rental where that's going to lead to huge numbers some months and tiny numbers others. But again, that's one of the highest, but it gets close to the one that I was talking about. Um, but I think that one, I think it's not accurate. Um, and it also, again, it fluctuates, right? So when you go through these though, you find very few. Okay, now we've got a 10, right? This one looks exciting. This is actually one of the ones that they kind of say it looks more like a HELOC, right? They're actually taking, do I have this one open? I don't have this one open. Um, it's basically a lease back to the owner. And so the reason that number is so high is because the owner is continuing to pay the property taxes, homeowners insurance, property management. And you can say, well, that's a high cap rate triple net lease, but it's just not really. Um, it's when you dig into the structure, it's not really what it is. So okay, that's not an actual real estate investment at that price, right? And they have the opportunity to buy it back from you. And so we get down to the ridge top. This is actually one. I think this is one I own, and it is because the math is close to real, right? It's paying a decent yield, a really good yield because of the way that the debt works, right? The funny debt structure on Lofty. If you don't know what I'm talking about when I say that, watch the video 7 tips everyone needs to know before investing on Lofty or something like that. I think that's the most recent video where I break that down. But what that debt structure looks like. But so here, if you actually annualize last month, it's an even better cap rate. But this has been a relatively true number. I think they shoot a little bit high because they don't have any vacancy collection loss over time. But this has been a property that it performs well. If Lofty was full of these properties, I'd probably own more that were $50 plus tokens, but there's just not a lot of these, right? And so it's giving you the real high yield because of the structure, but if that structure goes away because the debt gets paid off, you still have a pretty nice unlevered yield. And then as a DAO, if we wanted to vote to put some leverage on there and juice our return again, we could do that. Now, one of the problems that happens, you do still have the problem of if they're paying off that debt, then we get diluted quite a bit, but you just get diluted down to whatever that unlevered yield is, right? And so, um, so there are a couple, and I think I always say that, there are a few that I think actually work, but for the most part, I mean, you see, okay, we've got a 10.9 on Wild Olive right now, but if you've been in that Discord, it is a little tumultuous. It's also, at the moment, a short-term rental that doesn't seem to actually be permitted as a short-term rental, and they have a workaround that I've questioned quite a few times if it's actually actually valid or not. But anyway, um, as you go down, I mean, yes, there are a couple that you can find that have a decent cap rate. Most of them that you find, it's because there's a calculation error or they're doing something weird with the structure. But if you go on Mogul, basically every single deal looks like that, right? And so that's the difference between having a professional team that's used to looking for deals, going out, finding them, and bringing them to the platform, versus I really don't know how they're finding people on here, but they're certainly not doing it by trying to find good deals. But they're really trying to offer the platform as a place for people to come and get some liquidity, right? And as long as that is the model, I think that we'll very rarely get the types of deals that are even worth investing in at their par value, right? At their $50 per token value. And you can even see like some of the ones that are, um, that are pretty good end up having really high, end up being a premium over the par value anyway, right? Um, so that's I think, that's hopefully that issue is clear, right? Like the deals themselves just don't make sense. And so then they do this little, some tricks with the financing, sometimes with, mostly just by having the co-owner pay the finance, pay the debt outside of the structure, which is, works until it stops or until it gets paid off, or, I mean, I've talked a lot of times about why I don't like that. Um, but, the property itself, if it can't even, a lot of these are not going to carry their own debt when their cap rates are so low. And so you have a situation where you don't have very much of an alignment of interest between the co-owner who brought their property to the site and us as investors who are buying into it. And so that's where I think that there's a lot of problems. But I think there's a solution, right? And the answer is, or at least one, there's some potential solutions. But I think one of the big ones is a big part of the problem is most of the properties that get brought to the site, somebody's already bought it. A lot of times they've done their business plan to the property, whatever it is, right? Converted it to a short-term rental, whatever they're going to do to it, fix it up. Maybe they're flipping it, right? And then they bring it to us, and we are buying it as a quote unquote stabilized property. Um, and so there's no real, most of them, there's no upside from the point of us purchasing it going forward. And most of the time they're selling it to us at an inflated price relative to what they bought it for. And so I think that there's two ways that, so there's two different problems there. And I think that there's a way to address either, right? Like one, if they do have more set up like this Hawaii property where Earl went out, he had the property under contract. He used Lofty to actually raise the acquisition funds, and then they bought into the property basically together. Um, it didn't work exactly like that because he was selling the tokens for over par value. So he is, in that scenario, there is a little bit of, you know, uh, a little bit of a disalignment of interest because it's not his investment dollars in that do not look exactly like mine or yours if we bought into it with those earlier, from those initial limit orders. I think that's okay. I mean, one of the things, whoever, in a situation like that, you need to reward the person who's putting the deal together. I think a better way to do it would be to explicitly have a fee, an acquisition fee, and that's what Mogul's really doing is they have an acquisition fee. They do a 5% fee on the front end, and then after that, they also have an ongoing, I think it's like, I don't know, it's a very small ongoing fee, somewhere in the neighborhood of 2 or 2.5%, I believe. But it's already baked into their numbers, and that's why uh, I don't really focus on it that much because it's, if these returns look good with their fee, then it's fine, right? And so I think in the same vein, like if you have somebody bringing a property to the platform like this one was, it should just make it explicit. This is how much they got paid for putting that deal together. This is their ongoing fee for being the co-owner who's handling the deal, right? And obviously with the governance structure, there still has to be voting and there's still, so it would just be sort of just like what the co-owner's doing. But it's clear what they're getting paid for it. I think it would be a lot cleaner, right? Some of the people I talked to were like, I liked this deal, but it was way overpriced. Um, and part of that is because their reference for the price is just $50 is what it should be, right? Um, not really thinking about, well, but the people that did buy it were just very focused on the yield, and that yield is primarily created again by the financing structure. I don't remember if what the cap rate is on this. I don't know that this was a particularly strong cap rate. Yeah, I mean, this deal, I think the main reason it works is, they did have a rent credit. Um, and it had a very high, I think it was like 95% leverage. Oh, current loan 642,000. Okay, not quite that high, but very, very highly levered. Underlying asset price 722. Um, I think they put together one of the things. I think Earl's really like deep in the Lofty ecosystem. He really understands how to put these deals together that will work for people. I think if you invest in this, I mean, I didn't do it, right? Because I don't like that it appears to be, a big premium to what I think the real world value is on these properties. Um, I think because, it really comes down to do you believe that that co-owner is going to be able to continue to pay um, the mortgage outside of the structure, right? Because if something happened and the property had to pay it itself, that's the real risk, right? And so that's what worries me about a lot of these where, okay, the way it's set up right now, there's a great yield, but if you had a situation where the property had to pay its own mortgage, it's going to be negative or, very close to zero yield. That's one of the things that I just want to look at, right? Like I am looking at the actual fundamentals of the property because I think it's a good indication of what the risk is. And I think that, the reason people kind of get past that on one like this is because, they've just come to really trust Earl. He is good at executing within this ecosystem, right? And so, um, no pun intended, I forgot that's like the name of his management company in there. But like in the whole Lofty setup, he's been really good at coming up with ways to make deals work. But I think if you just had a more normal acquisition model where people knew I can get a property under contract, I can bring it to the platform, I'm selling it at the price I'm buying it, but I get to add in, whether it's the 5% premium to that, just like they always do a 5% premium, that can be your fee, right? And then you have something ongoing. I mean, if you did that, that's all of the price that you're paying for these mogul guys. And that's without any, that's not, without even thinking about the transaction costs on Lofty, right? Those are built on top of that. And the team that you have over here that's looking for deals is really hard to beat, I think, right? But I think there are operators on this platform right now on Lofty that could go out and find those type of deals if Lofty sort of normalized an acquisition model. And then then we have basically complete alignment of interest, right? Like you go find a good deal. Yes, you're getting a little premium for doing it, but in general, you're only going to do well if that deal does well, especially if you're getting your 5% as equity, not as a fee, right? And so that I think is the solution, one potential solution. But the other is, um, the other is that, there's just no, so if you look at the mogul deals, what are they? Okay, this is a pad split. This is a pad split. Um, this is a short-term rental. I mean, basically, they're putting out short-term rentals and pad splits. Why are they doing that? Those are the two types of deals that actually make sense today, right? Like in most markets, it's very difficult to cash flow as a long-term rental. It's very difficult to cash flow, because of how high interest rates are relative. Yes, you can go buy properties in somewhat terrible markets and still have good cash flow, or markets where I wouldn't want to invest in long term, and most traditional real estate investors wouldn't. Um, but where I think there's an opportunity here is there's plenty of homes out there that people own already that they could bring to the platform at something, that is giving them somewhat of a profit, but convert them to a pad split or convert them, have a, so basically have an experienced co-owner from the platform, someone like Earl or Alec or someone who's, both done short-term rentals, or pad split, rent by the room co-living. I don't think anybody actually has a pad split on Lofty yet, but they have co-living properties. Pad split is just a company that assists with, they're I think probably the most well-known co-living management company. Even though they don't provide a full property management for you, you still need other services. But I think there's a potential for somebody like one of those guys to go out, find people that have a property that was a long-term rental and it's currently vacant, or it is a long-term rental we're expecting it to be vacant soon and can execute this new business plan, right? And so they bring the property to the platform. Uh, it's, the cap rate, because it, as a long-term rental, is a 4 or 5, or, not nothing great, right? Maybe three, 4, 5. If it's in a good market, that's probably what you're getting. Sorry about that. I just had this freeze again. I had a good run where it wasn't doing that much, but I think it's because I'm opening and closing a bunch of tabs right now. But anyway, you go out, you find someone who owns this property, they bring it to the platform, they get paid out a decent amount relative to the value to them as it being a short-term rental, I mean a long-term rental, but then whoever this is that's assisting them with the onboarding, maybe you get a little bit of equity, maybe you just buy into it, but then you help by executing the business plan, turning it into a pad split, turning it into a short-term rental. That's all done once it's already on Lofty. Everybody who invested in that property gets the benefit of that, the basically of the improvement in value, right? And so I think that's a way that you can have the investors share in the upside, and then then you have deals that are high yielding deals based on their fundamentals, not based on some financial tricks. And I think that would, I think there's an opportunity. I know there's a lot of people out there that have long-term rentals in markets that could potentially be good short-term rentals or good pad splits, and then don't really know it, or they don't want to be involved. They don't want to be the one doing it. So I could imagine. And I'm sure that a lot of those people are also people who have no interest in bringing a property onto Lofty, right? And so this is why I think there's an opportunity for somebody who wanted to be entrepreneurial, who's already, understands this platform pretty well, to go out, dig up those deals. You'd have to pitch it to them. They'd have to understand, okay, how does this platform work in general, right? I mean, they wouldn't have to understand all the ins and outs. They'd have to agree to let you, maybe they just give you some of the equity once it's brought on the platform. As maybe they bring it on at a 5% premium, but they give that to you for being the one that's helping execute the plan, right? And then obviously maybe you're one of the co-owners from that the initial process, and so you're one of the ones who is maybe you're part of taking care of the mortgage, maybe not. But you get a fee, your ongoing fee for doing some of that work. Um, built into the management fee, just like we're seeing now, right? Like okay, if you're doing it as a short-term rental, whatever the short-term rental is, plus a couple extra percent because you're doing a little bit more than what a third-party PM is typically doing. Um, I could imagine that model really working for someone who was doing a decent job of going out and finding those deals, and then helping onboard them to the platform, and then getting some equity in it from that, and then getting some ongoing fees for doing it. But it would make it a platform that is fantastic for investors that actually just want deals that are fundamentally good deals. Because why is that a better deal? Because you'd have a higher cap rate based on the price that you bought into it, because you bought into it when it was just a short-term rental. It's before, you're basically taking the risk with the owner of the conversion into the long-term rental or the pad split. Um, Obviously there'd have to be, the expenses that go into that conversion would have to be built into the deal, right? You'd have to make those work. But that's a model where y- basically you need, a more, I think, but either of those models could work, right? One where it's actually onboarding a new purchase, or where it's onboarding at the time that you're going to do your value add, like where you're going to change it, changing business models of the property. Because in both of those instances, you and the owner are essentially entering into the same deal, right? You're both trying to enjoy the upside of that property together. And so there's a lot less of this, like, this feeling of being, the exit liquidity, like, okay, because right now, as a co-owner, if I'm bringing a property to the platform that I've already owned for a few years, and I'm the one who turned it into a short-term rental, I want to get paid for the full value of the how that property is performing today, right? And you can see some of them clearly want to get paid more than that because they're, adding a 5% premium on top of uh their best month ever, right? I mean, a lot of the short-term rentals are brought to the platform based on annualizing their best month ever and then still, you know, tacking, they're tacking on some premium onto the appraised value, right? And so one of the things that you'll notice is none of this discussion had anything to do with the appraised value, right? Like I don't think if you're thinking about what's a good real estate investment, it has almost nothing to do with what that property is appraised for, right? It's oh, I just froze there. I think I'm still here though. It's almost entirely uh, what your investment is relative to what you're getting paid for it. And then, yes, the appraised value matters as far as like, I don't want to pay above appraised value because I want to think about my exit in the future. Um, but so, one of the times I was having a discussion with one of the owners at Lofty, and he was like, well, we're always just bringing them to the platform at appraised value or no more than 5% more than that. So it's all the same deal or it's ignoring sort of the fact that um, some properties as an investor, the only way I would want to buy it is if I'm getting it at a discount to the appraised value. And I think we've seen that play out quite a bit. It's the reason why some of these tokens sell for a very deep discount to the appraised value, even though uh, some of them are spitting out rent every month. These are rented properties, right? I mean, some of them have problems, but most of these are properties that have a tenant in them. They're operating, but people aren't going to spend $50 on these tokens um, because they're not a good investment at $50. They at $50 might be the appraised value. It might be what an owner occupant is willing to pay for that property, but it has nothing to do with what makes a good investment, right? What makes the numbers work there. Um, so I don't know. I could see either of the, one, I think doing the acquisitions, obviously Lofty is allows it because they've done this one Hawaii one. I think they've done some others like it, but I think, that's one that you kind of have to talk to them, figure out how that works, figure like I think it needs a little pushing, right? Like I think they mentioned this as sort of being a test at one point or an experiment. Not that like just anybody can do this, but the other where you just go out and find somebody who you're going to help them bring it to the platform and you're going to help them change the model to create the additional upside. That's a completely different. You don't really need anything from Lofty to be able to do that, right? Like if you go find that deal, they're going to onboard it. They might just they're still going to just onboard it as your whatever last month did. So it might have a yield that looks terrible. Um, but you'd have to trust in people to buy into your projections. And I don't know, maybe that is a difficulty that you'd have on here. I'd certainly be interested in buying those deals, right? Like I'd invest in those if if the market's right, if the property makes a lot of sense as because you can dig into, does it make sense as a co-living place? Does it make sense as a STR? Is the market right for it? I mean, there's all these things are relatively predictable, right? Like, I mean, it's not uh, real estate is pretty simple. It's not easy, right? Like it takes a lot of work to find those deals and to actually, a lot of interacting with people and contractors and there's it's not easy, but it's like the models are all simple, right? Like to figure out is this property going to work for X, Y, Z, whatever business model is pretty simple to do. So, I don't know. I hope to see people do that. If anybody, one of the reasons I was thinking about this is I've talked to some, a lot of people lately when I've been talking to them, I've been saying, hey, if all you're trying to do is be a passive investor, I like Mogul a lot more for that than I like Lofty. If I'm trying to buy deals as they come to the platform, if like we just went through, right, the average deal. Okay, the downside is right now on Mogul, you don't have the liquidity to sell, right? But like your average deal, if you're just comparing the actual fundamentals of the properties. I mean, it's just night and day right now. And so, um, if you're not someone who's willing to go out and just dig, or if you're not willing to, dig for the discounted tokens right now, it's hard to see how Lofty would work very well for you. I mean, like I said, there are a few properties that you're getting okay yields. I think a lot of those yields are going to go away in the future as debt gets paid down. As over time, it's we just have this weird situation where we don't always have the same, the co-owner who's responsible for that debt is not in the same boat as we are as investors. And so we're going to have, a misalignment of interest sometimes. And so that's the other thing too is, um, as part of, if you're doing either of those strategies, having the debt be covered by the DAO, I think is possible. I know it's possible, and I think it makes a lot more sense in certain situations, especially if you're able to find deals like these mogul deals, but you're onboarding properties that have this, an in-place debt that is much cheaper debt. You could create fantastic levered returns with the Dow covering the debt, right? And then you're all in the same boat. Um, I don't know. I'd like to see that tried a little bit more too, right? And I don't know. I like to sit on my couch and make money doing this as a fractional investor, right? Just buying little pieces. It's because I'm old and broken, and I did this stuff early in my career where I was actually a little bit more entrepreneurial. Um, now I'm more in like trying to allocate capital and find good deals, right? But I think that there's like real opportunity to use Lofty as a platform, for a couple of motivated people. And I think that that's what Lofty needs in order for it to really thrive. I think the mogul model, it's much less there's no decentralization, right? Like you just have to trust their team. But if Lofty can't figure out how to attract that caliber of deal finder to bring properties to their platform, it's hard. Their path forward seems really difficult, right? I mean, there just keeps being deals on here that I'm just like, I'm just not excited about investing in that deal. If I'm going to be using an somewhat unproven technology, right? Like this is it's the platform's only 3 or 4 years old. In real estate terms, it's a baby, right? Like most stuff, real estate is a very slow moving industry and it's been around forever. And so if I'm going to be doing something that is, cutting edge or, has, there are, this platform has never been through a downturn. There are, I'm sure, risks that none of us realize exist yet. And so if I'm going to do that, I want to be, I'm only going to do it if it's making it so that I can buy better deals than I could just buy in my own backyard, right? And if that's not the case, right? If we continue to just have, markets that are just not very, that I don't expect to do well long term, and properties that are only providing good yields um, because of the way the debt's structured, I don't believe it's a sustainable model, right? And so I think the one big fix is attracting better deals. Um, and I don't think at least in my impression, is they have no clue how to do that. I think both of those two models would be a way to do it. And I think both of them are things that can be pushed from our end, right? As users of these platforms, maybe not the typical person who's just looking to, sit here on the couch and buy into other people's deals and makes money. But more and more, I'm starting to talk to people that are using some of these platforms in an entrepreneurial way. If that's you, you're invited to the Discord too, right? And maybe we'll set up a separate channel too for talking about the not a separate full Discord, but like a little sub channel where we can talk about creative strategies and ways to go about doing this, ways to attract those deals if you're because I mean that's basically what I've done as my job, right? Is actually go out and find deals, and so that's something I feel like I could really help some people with if they were interested in understanding how they could do that. But short of that, for my long-term dollars where I just want to buy a property, let it sit there, let the business plan go. More and more, I'm just leaning towards mogul for that. Obviously, things could go wrong tomorrow, and I could change my mind. So don't just do it because I am, right? But if that's the goal, I think that we need to have a put. If anything other than a bottom feeding like discount strategy on Lofty is just hard to make to make the types of returns that I'd really like to make, especially risk adjusted, right? Because I think there's a lot of risk built into these models where, you have a property that can't pay its mortgage and we're just trusting that the co-owner can, right? Which is really the situation for, I think, a lot of these. Um, so it doesn't make a lot, so it's not the same as just investing in a property that's covering its debt at a healthy level. So anyway, that's really all I want to talk about. If this is something you guys think is interesting and you want to talk about more, if there's specific topic is about like maybe how it could be implemented. I'm curious if this is something anybody watching this channel actually cares about at all, or if it's just I just want to find a place to passively invest and that's it. I completely understand that. Let me know in the comments, um, or jump in the Discord and talk to me there. That is it, I think. Until next time, I'm going to keep making mistakes so that you don't have to.